All right, so the U.S. is officially in a recession. The second quarter GDP report came out earlier in the day, and it showed that the overall economy contracted 0.9% in Q2. This is the second straight quarter in a row where we saw GDP fall, and this is a historical indicator, historical pattern that would indicate we are in a recession. A lot of people say that if we see two quarters in a row where GDP contracts and falls, well, that is a recession. So today I want to quickly talk about what is going on specifically with these numbers, because we're seeing some big trends starting to take place that could have impacts on our finances, whether you're invested in the stock market or crypto. And I also want to talk about whether or not are we actually in a recession, or is it just based on these two numbers and is it not really happening? So let's talk about it. First thing is going to be with the overall GDP report. We saw earlier in the day that GDP decreased at an annual rate of 0.9%. In Q2 2022. I posted about this earlier in the day on Twitter, so if you don't follow me there, make sure to do that because I post a lot of the content earlier over there. And based on historical patterns and what many people would say, two quarters in a row where we see GDP report fall, this would indicate that we're in a recession. So we're seeing a lot of numbers show that the economy is starting to slow. Right now, we have seen the consumer spending, which powers the majority of the economy, rose 1% on an annualized basis, which is a slowdown from previous months. We saw it increase more dramatically in Q1 of 2022. So slowdown in consumer spending. Second is home construction. According to the GDP report, we saw that home construction dropped 14% at an annual rate, which is a lot to do with interest rates rising. More people cannot afford to buy homes. Mortgage rates are rising, and it's starting to exclude a majority of people from buying new homes. We're starting to see the housing market start to come back down a bit as well. Third thing is going to be with inventories. Inventories, which is the amount of stuff that has been produced or imported but not yet sold, actually dropped as well. So companies added to their inventories in the second quarter, but it was more slowly than they did in the first quarter. So again, more slowing down. Fourth things with business construction. We saw overall that business construction dove 11.7% on an annualized basis, which is really companies are not building as many factories, as many warehouses, and they're not ramping up production as much as they were prior. And then lastly is really going to be with federal government spending. That shrank 3.2% as well. A lot of this has to do with stimulus checks starting to run out and other government policies that have been spent no longer being spent anymore. So overall, what we're seeing is that yes, the overall GDP has come down yet again. It was against expectations. People were expecting to see a slight increase in GDP for Q2, but we saw a decrease. Yes, that has happened. We're also seeing a slowdown start to happen in all these different numbers, from consumer spending to the housing market. We're seeing a slowdown there. So right now, according to all technical indicators, it would say that we are in a recession. But what I'm seeing and what many people are talking about right now, top economists in the world, they're explaining how, yes, we're starting to see a slowdown, but based on a majority of indicators, it doesn't feel like we're in a recession just yet. What does this mean for us and our money? Well, not too great, because what it really means is that when we're looking forward, things could potentially get a lot worse if we're just finally starting to see a slowdown. And I mean worse in terms of the overall economy. Jobs right now are still increasing. We're seeing more people get hired every single month. But what I mean by bad and things getting worse is jobs are not going to be as readily available as they were previously. That is starting to happen. We're seeing other indicators start to come down as well. The good news, though, so that's the bad news. The good news is that the stock market, we have to remember, is a leading indicator for the economy, meaning that stock market doesn't show what is happening in the economy now. It shows what people predict is going to happen in the future. So this is a good sign for actually the stock market and for crypto, because it appears like for stock market and crypto, it's factored in a lot of what now is being released in all this data. It factored in all of this slowdown, rise in inflation. We saw dramatic drops, 20% drop in S&P 500, over 50% drop in the stock market. And so, yes, we could see a little bit worse and to come for stock market, but you have to remember, the stock market is not showing us what is going on now in the economy like all these reports are showing. The stock market and crypto are showing what is going to happen in the future, what is predicted to happen in the future. They're leading indicators. So moving forward, the one thing that I would say would have negative impacts on the stock market would be more so what is going on with the inflation report and CPI data that comes out at the beginning of August 2022. This report, I believe, is August 10th. It's going to show, has all of these efforts from the Federal Reserve increasing interest rates, has that started to combat inflation? As long as we see inflation below 9.1% in next month's report in August report, that would be a very good sign for stock market and for crypto. Does that mean that the economy and jobs may decrease? Yeah, we still may see jobs and the economy struggle, but stock market and crypto, you have to remember, are leading indicators. They're showing us where the market is going. So ultimately, keep an eye out on that August report for CPI data. We need to see inflation below 9.1%. As long as it's below 9.1%, what is going on with the GDP report is more of a current situation. And remember, stock market is more of a leading indicator of what's happening in the future. So looks like everything, what we have talked about, what we have discussed with the stock market has started to be factored in. Market has dropped. Everything with the economy is now showing that. And let me know your thoughts. Do you think we are in a recession right now? Do you think we are entering one? And how do you think that's going to affect the stock market? Curious to see what you think, but I hope you enjoyed, and I'll see you guys in the next episode. See ya.